Yes, all set. Yeah, sorry, a few technical issues as usual. And yeah, firstly, I would like to wish each and every one a happy New Year. Welcome to 2026. And with this new year, of course, one thing which is also very important is this new regulatory tool which comes into practice from transitional phase to actually going live, which is CBAM, a regulatory tool, which is really important if you're doing business within EU, either exporting or importing certain goods, which we're going to discuss. But before that, I just would like to say Happy New Year, everyone, and hope that this new year brings all your dreams come true. And yeah, okay, then quickly let me share my screen. Yeah, hope it is visible. Okay, so today we're going to discuss about CBAM. And if you've already joined the previous two live sessions, so where we discussed about VSME, we also discussed about EUDR modules or regulatory tools which are required for certain reporting aspects. But in this session, we're going to discuss about what is a CBAM and what it is, why it exists, and how it works in a very high level. Let's try to keep it in layman terms so that you have this introduction towards the CBAM. And we'll also show how you can use Earth emission platform if you're planning to, build CBAM reports. So without any further ado, let's get started. So I always like these one-line definitions, which I'm gonna show it in next slide. But in short, CBAM means Carbon Border Adjustment Mechanism. I think many of you already know who are working in this sustainability domain what CBAM is because it's been already there like in 2 years since 2 years, which was in the transitional phase where majority of the companies were already started working on this. But people who are new to CBAM, so it is nothing but Carbon Border Adjustment Mechanism. We're going to see what it is in a bit. So what is CBAM? So CBAM is the Carbon Border Adjustment Mechanism. It's a EU's tool, European Union's regulatory tool, which has been implemented to put a fair price on carbon emitted during the production of carbon intensive goods. We're going to also discuss what these goods are that are actually entering the EU Union or the continent, right? Within EU, there are a number of countries. So any country within EU, any country, if they are entering these goods coming from non-EU countries, coming to the EU countries, uh, there is also a price they need to pay. So what does it mean? It means, let's say you import goods, right? Which means you not only import physical goods, but you are also importing the carbon because all the logistical carbon emissions you have, all the air freight carbon emissions you have, and also the maritime carbon emissions you have with all those big cargo ships where you are importing these goods, let's say from India, from China. So you're importing goods, but you're also generating emissions, right? So this is for both the countries, for the exporting country and also for the importing country. And to make this fair, because within EU we also have these products getting produced or manufactured, but for cheaper price, majority of the companies they also go with non-EU countries to import these goods. And to keep it fair within the EU countries and non-EU countries, they have implemented or added this new tax, you can say, which is called carbon tax. So in a nutshell, that is what CBAM means. I hope it was clear. So there are a list of commodities which we're going to see in next slide, around six, I guess. And if any one of those commodities entering from non-EU nation to EU nation, they have to also pay a carbon tax. And that is what CBAM means. And why they are doing it to first thing, they are doing it to keep a fair price between EU and non-EU nations. We'll see how it is. And the second one is also for reducing the carbon emissions. So how they're going to reduce the carbon emissions? Because all the tax which they're going to collect from this imports from non-EU nations, they're going to invest them on a green energy deal. They're going to invest on green energy productions, like wind turbines, the renewable energy sources, things like that within EU nations. And also they're going to invest this in the weaker climate policy countries to develop them. But I think they have this 2050, 2030 plan, which is a long-term plan, which is part of this EU Green Deal. That is also where the CBAM is connected with. Okay, and the next one, which is CBAM, will apply in its definitive regime from 2026. So this is what I've been telling that. So new year with this new regulatory tool, which is coming into effect. So this was actually in the transitional phase from 23 to 25, which is the last year. And this gradually introduction is aligned with the phase out of free allowances, because up until then it was just free allowances. It was only needed for reporting, but there was not actually any obligation for you to pay the actual financial aspect. It was only reporting emissions. That is called transitional phase. But from 26 onwards, they have to actually there is also a financial aspect involved. We're going to see. And most important thing is the EU emission trading system, ETS, EU ETS, to support the decarbonization of EU industry. Okay. So what is CBAM again? So it's a EU's groundbreaking climate policy tool designed to prevent carbon leakage, right? And the other one, it is directly linked to EU ETS, emission trading system, which is the part of European Green Deal. And it ensures imported products face the same carbon costs as EU manufactured goods. And this is a bridge between trade policy and climate action. So how trade and climate, the bridge between the trade and the climate, trade policy and climate, that is the bridge, that is the gap they want to close. And especially if you look at this point number 3, this ensures imported products face the same carbon costs as the EU manufactured goods, because there are these products which are also manufactured within EU, but the EU manufactured goods are quite higher in price. That is why few of the companies, they like to import them from non-EU for cheaper price. But this also ensures that there is a fair trade happening between EU and non-EU, so that the pricing is also same, right? So that is what actually means bridging the gap between trade and climate action. So what is EU ETS? So to understand CBAM, it is also very important to understand what is a EU ETS. So the EU ETS, in a nutshell, it is a European Union's emissions trading system. And what does it mean? It means that, it requires polluters to pay for their greenhouse gas emissions. So there is always this cap for industrial manufacturings and aviation industry. That is all it started with. And they have to pay this. There is a cap on the number of tons of CO2 emissions they can emit per year. So that is the cap. And if they're going to exceed the cap, they have to pay for this exceeded emission. And that is where they do it in the emission trading system, right? It's basically a carbon credits trading system. And this has been launched in 2002, and it is one of the world's first carbon market. And again, it is the largest one. And this actually brings overall EU emissions down while generating revenues to finance the green transition. So why they have introduced this in the first place is to reduce the emissions, because if there is no cap, if there is no threshold, if there is no limit, and people think sky is the limit, and all this industrial manufacturing companies, right, especially the big scale companies, they would start producing and productions in high volumes if there is no limit. And high productions is directly proportional to high emissions. And as we know that if there are high emissions, which is directly proportional to global warming and climate change. And to eradicate that, they would like to emit the emissions. They would like to limit the emissions. And for that, they have put this threshold. They have put this cap. If you're exceeding beyond cap, you have to pay for it, in a nutshell. And the payments, right? All this excess revenue which they are generating from this ETS system, they are financing this amount for green transition. Like I mentioned in the previous slide, they're going to use this amount. They're going to use this money for renewable energy sources instead of fossil fuels, more and more wind turbines, tidal energies, solar energies, these kinds of systems they're going to put in place, um, so that we have this green transition from fossil fuel to green transition, right? This is where the finance is going. And it covers the electricity and heat generation, industrial manufacturing, and aviation sectors, which account roughly 40% of total GHG emissions in the EU. And in 2024, it also started covering for maritime transport. And it operates in all EU countries plus Iceland, Norway, and is also linked with the Swiss ETS since 2020. So this is what ETS means. But you can think, how is CBAM connected to this ETS, right? Because if you see, there is a cap for all the manufacturing companies within EU. But if you are importing things from non-EU nations, and that is the gray area where companies are taking advantage. And to eradicate that, they have introduced this CBAM, which is a carbon tax for importing goods. So that is the gap which they want to cover after introducing this ETS. The gray area, which has been identified, and CBAM covers that. Hope that makes things clear. And why do we need CBAM? Again, because of this carbon leakage, which I mentioned, because ETS is there for in-house productions. When I say in-house, EU, within EU, if there is production, there is a cap, there is a threshold. If you exceed that, you have to pay for it. But if you import, there wasn't any system in place. And that is why they introduced this CBAM regulatory tool to prevent this carbon leakage. That is what we call carbon leakage. And it also helps the global climate goals, because these exporting countries, most of them, they also have this weaker climate policies. By introducing CBAM, which means you're also you're also making the rules very strict, so that now they also start reporting on their emissions, especially on the supply chain, on their direct emissions, indirect emissions, on their logistical emissions, things like that. And again, to eradicate unfair competition between EU and non-EU, and to also keep economic justice, because like I mentioned, to protect the effectiveness of the EU ETS systems, to close the gap of this gray area between the trade and the climate action. And what is a carbon leakage, right? So climate rules occurs when companies move production to countries with weaker climate rules, like we discussed. Also helps with global emission, leads to no real reduction in global emissions, EU climate policies, and unfair cost. So pillars of CBAM. We've discussed all these points. I'm going to quickly skip the slide. Yes, this is the most important thing which is needed for us to understand when it comes to CBAM. I mean, I'm not sure if you've attended the previous session which we did for EUDR. For EUDR, there were also a list of commodities where the policy was applicable in the same manner. The CBAM has started with this six components, or six industries, you can say. And this is the initial phase, right? I think they're going to also expand it to more and more other industries, but they wanted to start with these six industries because majority of the CO2 emissions are emitted with these industries. Because in one of the slides, we have seen that with the aviation, manufacturing, and one other industry, there is around 40% of global CO2 emissions which are accounted for. And when it comes to CBAM, thumb of rule for now, it is applicable to cement industry, it is applicable to iron and the steel industry, fertilizers, aluminium, electricity, and hydrogen. So what does it mean? It means if you are an EU company, and if you are trying to import any of these products, or any of these associated products, or raw materials related to any of these products, you are applicable for CBAM reporting. Hope it is clear. Yeah, for example, you are in the real estate or construction industry, and for example, you wanted cement. And let's say the cement pricing in India is cheaper than Europe, and you're purchasing in bulk and you're importing them from India. So in that case, you need to do a CBAM reporting, and you need to pay carbon tax from 2026 onwards. So please take this into account if you don't have a CBAM reporting in place in your existing supply chain. And who is affected by CBAM? So EU importers, like we discussed, because companies who are importing within EU, and the non-EU exporters, companies outside EU who are exporting to the EU. So these two parties are or stakeholders, these two parties are affected by this. The EU authorities, because we need to do reporting and certificates where EU authorities are also involved to do the checks and audits, and then third countries, the countries where developing a carbon pricing system. And what emissions are considered? Because at the end of the day, we're talking about carbon emissions, right? But there are also different types of emissions when it comes to consideration. You have a scope 1 emission, you have scope 2 emission, you have scope 3 emissions. So if you are new to this emission or GHG greenhouse gases, and if you're confused between what is scope 1, scope 2, scope 3, we can also have a different session on that. But that would be beyond or outside the scope of this discussion. But in a nutshell, scope 1 are more or less the direct emissions which are happening directly from your production processes, right? Let's say you are a cement manufacturing company and you have this big manufacturing unit, manufacturing a plant where you're running machinery, where you're running motors, engines, where you're putting fuel, where you're the raw material is going in, and you have a finished product coming out, right? So this entire process is like your own production process for cement manufacturing. And whatever the emissions which are emitted, these are called direct emissions. And then there are also indirect emissions where you might purchase raw materials from different third party. And then there are logistics where you need to transport those. So these are all come under indirect emissions, right? So this is how the scope 1, scope 2, scope 3 has been divided. And what does it mean in this case that direct emissions and indirect emissions both are considered when it comes to CBAM reporting, right? And how do I do it? Can I use my own methodology? Because there are different methodologies available out there. And how do I calculate these emissions? You can also reach out to us. We can also help you with that. But from 2026 onwards, I think you are supposed to only use EU approved methodologies for doing your emission calculation, because that is where the audit happens. So keep in mind, the direct and indirect, both the emissions are considered as part of CBAM reporting, and only EU approved methodologies are allowed for calculating your emissions. And one important thing to also keep in mind is the CBAM timelines and deadlines, right? So CBAM was rolled out in 2 phases because, this is how they always try to introduce if they're introducing a new framework or a new tool, because immediately asking companies to adapt a policy or a regulation would be very difficult because, there are supply chains in process, there are workflows, there are systems in place, and to implement a new framework within the existing flow, it takes time. So that is why what the EU Union has done with the CBAM regulation is that they've started with 2 phases. The first phase was called a transitional phase, right? And within this the first phase is transitional phase, and the actual one is the live phase. And the transitional phase has begun from 1st of October 2023, which is like 2 years before. And this phase, so this is the transitional phase. So in this phase, what is really important is the importers must only report emissions data, and it is only reporting, but there was no financial payments were involved in this phase. What does it mean? It means that you report and you calculate your emissions, like direct emissions, indirect emissions. You upload them in the CBAM system, but you don't have to do any payments because this is a transitional phase, right? You only start with the reporting. And the main focus is only on the data collection and just to see the accuracy, because this really helps the companies to put systems in place to automate this calculation. So this is called a transitional phase where no financial aspect is involved at all. But from 2026 onwards, going back to this one, so from 1st January 2026, a definitive period starts where financial obligations also begin. So it means that in respect with your emissions, now there is also a payment involved for your carbon tax. So if you're importing 1 ton of CO2 emissions based on your calculation, and direct emissions and indirect emissions, the combined emissions are, let's say, 1 ton CO2 emissions, then you would pay, for example, 100 euros, just thinking out loud. So it depends how much is the price. You can also use tools to calculate your CBAM taxes. But for example, for 1 ton CO2 emissions, you pay 100 euros, right? So it depends how many tons you are importing and how many tons of CO2s has been calculated. Based on that, you would also purchase these certificates. So these are like the tax certificates you pay to the authorities, and you purchase these certificates. And these are required from 1st of Jan 2026. So again, Happy New Year. And yeah, so you can see that by 2034, free EU ETS allowances fully phased out. CBAM fully applies to all emissions, right? So this is the target, and this is the timeline what they want to achieve. And what must be reported? Again, the type and the quantity of imported goods, country of origin, if it is a non-EU, so you also need to define which country it is coming from, the production, the installation details. Most important, the embedded emissions data, scope 1, scope 2, scope 3, direct, indirect emissions, and the carbon price, if it's already paid abroad, let's say in the other third countries. If they already have a carbon pricing and if you've already paid there, you also need to attach that information as well. So these are all the things which must be reported. And how CBAM will work financially? CBAM certificates, carbon prices, carbon price deductions, and then equal carbon cost. Right. So these are the aspects which are involved when it comes to a CBAM in terms of financial aspects. Right. So the previous slides we saw in terms of a data aspect, collecting, calculating, methodology, emissions. But when it comes to financial aspect, which is going to start from this year, where the CBAM certificates are involved, the pricings are involved because the carbon pricing can also go up and down, like a trade systems, right? Like a trade market where it goes up and down depending on the ETS systems. How the carbon prices are around the EU and also around the world. So based on the carbon pricing, you need to purchase them. And there could also be carbon price deductions as well, because if you've already paid the carbon price in your own country from the exporting country, and you don't have to pay it again here, so you also need to incorporate that. Based on that, there would be certain deductions, and then equal carbon cost ensures equal carbon costs across borders. Yes, so simplified CBAM workflow. The structured compliance process, like first you start import from your production processes, collection of production and emission data, and do a emission verification, very important. Then do the reporting to EU authorities, and finally purchase the CBAM certificates. So that's basically the workflow. Yeah, so I think we discussed about these rules, the data, the certificates. Yes. So what happens if you don't comply, right? I mean, like VSME, because VSME is a voluntary standard framework for reporting. This is not voluntary. This is a binding regulation. Like I mentioned in the beginning, this is a regulatory tool. So this needs to be implemented. This is an obligation. This is a regulation. So it is a binding regulation. So which means if you don't comply, there are going to be non-compliancy, which means penalties. If you're non-compliant, there's going to be penalties, right? For example, financial penalties. There are going to be restrictions on the EU market access. If your company has been flagged as a red, then there would be increased inspections and audits. There'd be like second, third, fourth, different stages of audits. And then, of course, legal and reputational and brand reputational risks. And we don't want that. So I think it is very important that we keep the records in place, in order, the papers in order, so that we don't get into these issues. And how, if you look at a bigger picture, especially for climate enthusiasts, how actually CBAM fits into EU climate policies, because it's a part of European Green Deal. It complements the EU ETS systems. It's links to climate policy with the global trade, and signals future carbon-based trade rules. So that is the direction. That is the future. That is the path the EU wants to go to reduce the emissions, to eradicate at least to stabilize the global warming. Thank you. And I'm going to quickly also share our Earth emission system. So for people who are new, so we have an all-in-one platform for sustainability reporting and carbon management, right? And it is called Earth Emission. And you can just click on sign in. And if you're new to the system, you can sign up yourself. You can sign in. Right now, we have free credits. So you can already play around with the system. So there is no pricing. And yeah, you can give it a try and let us know if there is any improvement which we can do to improve the systems. And once you log in, so this is how it looks. For example, if I go to the overview, so this is where you see the list of modules, for example, CSRD, taxonomy, BSME, EcoVadis, EUTR, CBAM, GRI, CDP. So these are all the modules which we've been building because our intention is to build a single platform which can be used for all the different types of modules, which contributes to the EU climate goal, right? Because each and every individual company might have a different requirement, might be applicable only to a different regulatory policy. But in this case, we're going to discuss about CBAM. So if you click on CBAM, so here you can see overall progress, and then you have different options below, right? Because it's all about registering your importer, which is in this case called a supplier. And I've already created a sample thing. For example, if I'm importing a steel from India, a company called Steel India, right? But how it works, right? For the first time when you come here, it's all empty. So the first thing you need to do is click here. You need to first add your supplier, and you can add supplier manually. You can add supplier bulk. You can download the template, because if you have like multiple suppliers from multiple locations, you can also do it. Or if you have supplier for each and every individual component, which we discussed, which are part of CBAM, you can also do that using our template. Easy peasy. And then once the supplier is in place, then you need to fill in certain information which is needed from the supplier. For example, the general company information, the product information about the steel, the carbon pricing already paid, if you already paid it in abroad, which we discussed, so that you have this carbon pricing deductions. You don't have to pay again the same amount, so that there will be certain deductions. And then the compliancy and documentation. So this is where you can also fill in all that data. Okay, but let's say you also wanted to log emissions. So we also have that option here. If you go to the emissions, in this case log emissions, so you can also log emissions for different sectors. So right now we have few sectors enabled, but we are also working to implement other sectors. But if you have a requirement already for other sectors which you are interested, we can also work on that, enable that, so that you can already use it to calculate your emissions. Because like we discussed in CBAM, we need direct emissions, we need indirect emissions. That combination of the data is also needed for calculating the CO2 carbon pricing, because based on the CO2 tons, the carbon pricing will be added on that. Okay, and going back to CBAM again, so that is how you fill in the information. And once you fill in the information, the list of questions which are still pending, and based on that you fill in everything. And once the questions are filled in, and finally you go to this results and reports. And yeah, so we also have this nice fancy map where you can see, for now it's with a dummy, but where you can see that if you have imports coming from different nations, we are also pinpointing them in the map, so that you can also visually see from which country how much emissions are coming, and which direction it is happening. And also then you have a report which you can download within a PDF form, and there is also a report which is in the Excel form, and you can also see the data. Yeah, I think in a nutshell, that is all about CBAM. I know it's a lot of information to digest, but I hope you got something to know about CBAM, and why they have introduced this, how it is connected to a bigger global picture. And it is a regulation, it is a binding regulation, and it is becoming more and more important from this year, from Jan 1st onwards. So if you're already working in any supply chain, logistical companies, or any manufacturing companies related to one of the products which we discussed, then it is applicable for you. You can reach out to me or any one of our team members who can also help you, assist you. And like I mentioned, we have free credits, so you can already start using our system. But if you need more assistance, we are more than happy to help you. And with that said, thank you so much, everyone, for joining. And again, I wish you all again happy New Year, and we will meet again with another session in the coming days. Have a nice day. Bye.